Benefits on the fly. Is unbundling your health insurance plan the right move? Before we get into the details of unbundling, this particular strategy is best used if your business has at least 30 or more employees enrolled on your health plan. Health insurance is a major business expense, and many companies stick with the bundled plans because they seem simpler. But simpler doesn't always mean better or cheaper. So what is a bundled plan? A bundled plan means your insurance carrier handles everything. They handle the network access, your claims administration, your stop-loss coverage, and pharmacy benefits. It's all in one package. And this all-in-one approach is easy, but it limits transparency and it hides profit margins within each of those components. Unbundling means breaking out each part of your health plan, giving you more savings and more control and more flexibility. You don't necessarily need to change your insurance carrier, but separating components lets you negotiate each piece individually, ensuring you get the best value. So why would a business unbundle their health plan? Well, for starters, lower costs. Shopping each component separately can unlock better pricing and reduce long-term costs than a pre-packaged program. Then there's customization, by allowing you to build a plan that aligns with your company needs rather than accepting a one-size-fits-all approach from the carrier. There's also greater flexibility by being able to adjust your plan every year as your business evolves rather than being locked into a bundled structure. And then, of course, there's pharmacy cost control. Prescription drugs, especially specialty medications, are one of the fastest rising healthcare costs. Unbundling gives you more options to manage spending and improve employee access to medications. Then there's vendor accountability. Separating components makes it easier to track costs, evaluate service levels, and ensure you're getting what you paid for. Additionally, there's better data and analytics. Many unbundled solutions offer deeper insights into claims data, helping you spot cost drivers and opportunities for savings. So, is unbundling right for your business? Unbundling isn't for every business, but the majority can benefit. The only scenario where staying on a prepackaged, bundled plan makes complete sense is if your current setup provides excellent service, keeps your costs low, and fully meets your needs, which is rare. The biggest hurdle is often timing. Some businesses delay unbundling because they're focused on other priorities. But considering that healthcare is one of their top expenses, it's worth taking a closer look. So where do we start? Number one, you want to review your current plan structure and just determine if you're bundled or unbundled. And then number two, you want to pull your contract and identify how you're paying for each component, especially pharmacy. Number three, you should assess what your options are at renewal. If you're self-funded, you want to make sure you look at the pharmacy benefits and stop-loss coverage, which are often your best places to start. Number four, you need to evaluate performance and rate your current setup in terms of cost containment opportunities, the service quality, and of course, employee satisfaction. Number five, work with your advisor to explore opportunities to restructure and to go to market on those individual components to see if you can get better pricing. Unbundling doesn't have to be complicated, but staying bundled could be costing you more than you realize. If you're ready to take a closer look, let's talk.